Hello traders and welcome to another video review. Today is Wednesday, January 14th, 2026. Let's take a look what do we have on the economic calendar for today. So, how was the Asian session? Building approvals in Australia up from minus 6.1 to 15.2 in line with the forecast. Data from China, export up from 5.9 to 6.6, beats the forecast of 3%. Imports up from 1.9 to 5.7, beats the forecast of 0.9. Trade balance shrinks below the expectations, but better than the last time. The Windows will give a speech at 9:15, and the new loans data from China will are scheduled for release at 11 o'clock. Russian Federation CPI is scheduled for release at 12:30, and then we got the series of the data from the USA. We got PPI, core PPI, current account, core retail sales, and retail sales data scheduled for release at 2:30. Expectations are quite high. Then we have interest rate decision in Poland. Then we have existing home sales, business inventories, retail inventories from the US scheduled for release at 4 o'clock. 30 minutes later, we got the MPC member Ramson to give a speech. Then we have crude oil inventories and cash in crude oil inventories. At 6 o'clock, we got Atlanta Fed GDP Now data scheduled for release. At 6 o'clock, FOMC member Kashkari will give a speech. At 8 o'clock, as usual, Beige book. And 10 minutes later, FOMC member Williams will give a speech. So very, 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 very busy US session, especially the latter part of the US session. So without any further ado, let's switch to the charts. We start with euro dollar. So the euro dollar 4-hour time frame chart, rejection from the almost from the trend line, from the technical resistance after the bullish divergence. Very nice movement on momentum to 56. Now we are back below the level of 50. Let me just place the line here yet again for you guys to see. There you go. We are below the level of 50. Bears are in charge of the market. Bearish pressure is visible on the market. We went down towards this level here, 1.1635. So right now, the market is slowly going towards the weekly low. I mean, this is 9th of the January, so this is last week low. Apparently 1.1617, and it breakout lower, and the test of the 1.1544 is next. Only a sustained breakout above the trend line and above the technical resistance is bullish. Otherwise, bears are in charge of the market. Cable, almost the same situation here. However, the cable is still trading inside of this very, very tight range, roughly around the 100 periods moving average, but then the momentum went below the level of over 50. So for now, let me just add one more level of the support here. So basically there is something like this, 1.3389. As you can see, kind of a range, typical range situation here. We are not moving up, we are not moving down. Let's leave it. Let's leave this chart for another time. Not much is going on the cable. US dollar versus the Japanese yen hits the level of 159.46 as the movement to the upside expands. So the first thing is we are going to mark this swing high yet again, and please remember that this movement to the upside was made into the very, very much above the level of the 70 on the RSI. 79 is actually the extremely over bout level. And if you take a look here, let me just show you something. I just need my arrow. There you go. So that's the last time we hit the extremely high levels on the RSI, 78. Yes, and this is 79. Roughly 79.02, 1 point higher, right? Okay, it is higher actually. If you count everything, it is higher. But this situation here on the chart begs the question, wait a minute, maybe it is bearish divergence. All right, so yes, there is only a marginal increase in RSI, big increase in price. So it looks dodgy. At least it looks dodgy. So these two are almost equal. So please keep an eye on the current chart. It looks like we might have some kind of a morning star pattern forming here. Nothing 100% confirmed. We are waiting for the development on this situation. Gold is trying to break to another swing high. 4,639 was this swing high. However, another situation here. No, that's okay. That's something that might be considered as okay, but I think that there is another bearish divergence. You can see it here. That's definitely lower, marginally lower, not a big low. This low is not that much lower from the previous one, but this one is definitely on the price, right? 4,555, 4,651, almost over $80, right? So that situation on the gold looks really interesting, and it looks like the market might want to do some kind of a pullback. Nevertheless, in the background there is still up trend. S&P 500, okay, series of the swing high, higher highs, 6,996, almost 7,000. Nevertheless, the market is right now moving like this: pre-open high, fade, pre-open high, fade, pre-open high, fade. So it's looking very interesting. S&P 500. There is a series of the higher highs. There is a series of the higher lows. However, RSI is going maximally towards 64 points, and it's bouncing from the level of 50 every time we do the dip. So it looks like a classical staircase uptrend scenario, like up the staircase, yeah, up the up the steps, step up, step by step to the stairway to heaven. that might be the name of this pattern. However, it doesn't actually looks like, because you see, you got this wick here. Let me zoom in. You got the wick here, fade. You got the wick here, some kind of a pin bar, fade. Pin bar, bearish engulfing, down. So the bulls wants to go higher, but the higher they go, there is some part of the bears waiting to sell into the strength. Very interesting situation for now. Tight range, almost the level of 7,000 was almost hit. Nevertheless, please keep an eye on the situation. Crude oil. Crude oil is above 60.49, the level that we have been talking about. Nevertheless, we hit the extremely overbought conditions, and if we go back from the level of 61.49, so exactly $1 higher, if we go back below this fig red line, then the outlook remains bearish as well, and the market will go from the extremely overbought conditions down to the extremely oversold. So for now, let me just of course change the current lines from the technical resistance to the technical support, and especially these lines for the old line, the old supply zone. Now it's demand. Okay, so let's see if it works, because if there is nothing, if the price will fall like this, that means they gone, and we're going down to the lows of the December 16th, 54,492. There must be demand here right now, because it was a very nice supply, breakout test, movement to the upside. It looks like they want to go higher, but if there will be a pullback and the market will break below 59.80 and then break below this zone, it's very bearish, fake breakout, fake range breakout. We're going lower. In the background, we have a downtrend. In the background, so that movement to the upside might not be that serious as it looks like. So please keep an eye on the crude oil if we are not going back to the range. Now, Bitcoin, finally, they did it. We broke above 94,789. Let me just zoom out. So finally we broke out of this consolidation. Local high 96,442. Next target is here, 98,000, almost 99,000, just below 100,000. But We hit the extremely overbought market conditions. There is clear bearish divergence here, so maybe we will have some pullback to the downside from the extremely overbought conditions. Now we are testing the previous levels, 94,000, the highs of the 94,789, and we need to break higher. So let me just change this levels from the technical resistance to the technical support. I can't grab the other one. There you go, and this will be the technical support. So anyway, it looks like this for now. It should be somewhere here. There you go. So it looks like technical support. If we break above the yesterday's high, the road towards 99,000 is open. So please keep an eye on the Bitcoin. Maybe some pullback, maybe some consolidation, but it looks like the bulls are strong. They broke out of the consolidation. Please be aware of the short squeeze coming as well. If there is a short squeeze, there is very good area here between 94, 95 and 99 for the short squeeze to continue. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.